Okay, so today we're going to be discussing the trading journal that I've given you, and we're also going to be discussing kind of why journaling is so important. And we're going to be discussing kind of like why affirmation and why a daily checklist and why writing down your emotions and why being grateful before you even start trading is very important. And this is all scientifically backed. This is from all the books that I've read and all the podcasts that I've watched. And obviously, a lot of this is scientific outside of trading, but then once we put it into trading, it kind of all makes sense. Okay, so far we understand why the markets move and how they move. We understand the participants in the market. We discussed the reality of day trading and why majority of people lose. We've also discussed the importance of risk management, which is that's inside whilst you're trading. Now we're going to go over kind of like journaling and building a healthy mindset outside the chart and also during the chart whilst you're actually day trading. Okay. Okay, first thing I want to discuss is the difference between a passive and an active trader, okay? So this is the biggest distinction between traders who improve and those who don't. A lot of traders go 2, 3, 4 years of trading without actually being active or proactive, I should say, in their approach. Basically meaning they're just opening the chart, they're taking their trades, they're logging off for the day, they're being pissed off, happy or whatever, but they're completely unaware of the emotional state. They're not tracking the behavioral patterns and they're making the same mistake over and over again every week. And this is a byproduct of not tracking your behavior and tracking your trades, right? And without reflection, there's no growth. And they'll still be struggling months after trading. That's because they're not really actively looking to improve. They're just trying to make money and they're just trying to trade, basically. So now the active trader, he's actively aware of the emotions before the chart and during the chart. He's tracking every session and every decision he's making. He's identifying behavioral patterns that is holding him back from being profitable or that may be decreasing the amount of profitability he's coming up with. And they're constantly reflecting and looking to improve. This is very important to constantly find ways to better yourself, right? And he treats trading like a performance sport, not just like a hobby or a get rich quick scheme. And he's profitable in a fraction of the time. He'll become profitable much quicker because he's actively trying to improve and he's actively trying to trade better, okay? So reflection is very important in order to evolve. That's why I've included this. You have to reflect before you can evolve. If you just trading passively and you're not really looking to grow, you're never going to grow. You're just going to continue to make the same mistakes over and over. So journaling is probably the most important thing in trading. And it's not about recording the trades. It's not about just looking at your profit and loss and how much money you made. A lot of people just worry about how much money they make, what their risk to reward is, what their profit factor is. None of these really matter because these profit factors are just a byproduct of journaling effectively. Okay, so journaling makes it easier to see invisible patterns that you might not be able to identify without reflecting. So you can't identify what is hurting your performance until you have a record of it, right? So for example, for me at the start, a lot of the time I noticed that when I do take a losing trade, I tend to have a losing trade the next trade, meaning every time I take a loss, the probability of me taking a loss the next trade was very high, right? And this is not a technical issue, this is an emotional issue. This means I'm taking trades that I probably normally wouldn't take because I am hurt from the loss and because I am trying to make my money back, right? So this is an example of something that I had to deal with. And another thing that I noticed in my trading is that, for example, on Mondays sessions are generally Monday Asia session to be specific, are generally very slow because it's the first session of the week. And most of the volatility happens at the end of the night during New York and London. That's in general, but especially on Monday because the big traders haven't even logged in yet. So for me, I noticed my Monday sessions are very poor performance. I also noticed that after a losing trade, I tend to have another losing trade a lot more likely. And these are things that can allow us to kind of basically change the way we trade. So for example, on Mondays, I am sized down, meaning I am only risking half of what I normally risk just because I tend to lose more on Mondays, right? So now this allows me to increase my profit and loss that we discussed because I am aware of my behavioral patterns and I'm aware of the cycle that I need to break, right? And that's why without a journal, I would have repeated the same mistakes. If I'm not aware that on Mondays I tend to lose, and I'm also not aware that after a loser I tend to have another loss, I can't actually change my habits because I'm not aware of it. That's why journaling is very important, because it makes me aware of it, right? So after I've journaled for a few months, I noticed that my Mondays are very, very, very poor, and that allows me to size down on Mondays. And that way, Mondays, even if I have a losing day, it's not ruining my overall profit and loss as much as it would if I didn't actually journal and reflect. Okay. This is an example that I've included. I've already mentioned it. This is an example of me, basically. I constantly lose on Mondays. I wouldn't have had an idea why, because I never tracked it. And another example of some people, they struggle with over trading after win up because they tend to get very, very kind of like, what's the word? They get a superior complex, and they think that they mastered trading. So when they take a win, they tend to start taking random setups because they get overconfident, right? So I have issue with trading. You have underconfidence where you're not confident, and that's ruining your trading. And we have overconfidence where you're very, very, very confident, and now you're taking random setups, right? So that's why it's very important to be aware of how you're feeling, of how you're acting, and why you're acting in that way, so we can fix it, right? And obviously at the start, journaling won't really give you any input because you need a lot of data, right? So it will take you maybe a few months before you can have some data to reflect on. And yeah, so that's an example of what I did. I kind of, instead of forcing myself to not trade Mondays, because obviously sometimes Mondays will be very good, but most of the times overall they're going to be more bad than they are good. So for me, instead of cutting myself from trading completely on Mondays, because that's a very hard habit to form, to not trade at all, I decided to allow myself to trade, but to size down, right? So each time you spot a habit that keeps happening over and over again, you can go on and provide yourself with actionable steps to fix it, right? This is just a compounding effect of journaling. So after a few months of consistent journaling, you can look back and immediately spot the exact habits that are still holding you back. And this information is priceless, and this is something that I can't really help you with, and no strategy can help you. This is something that you have to do on your own, because it's kind of a reflection of your behavior and your emotions, right? And for me, I do think like you need at least 6 months of journaling before you can start to kind of recognize habits or formalities that keep on forming on a repeated basis for you to actually improve. But I want to emphasize that the journal is the most valuable trading asset, because it after a few years, it would have had compressed a lot of information for you to kind of reflect on. And this is just a general mindset check before you even chart. This is before you even open the chart, before you even think about making money. You need to make sure that you're not angry or frustrated. You're not emotionally affected by yesterday's loss. And you're not distracted by external life stress. Remember how we mentioned some people, maybe they're going through some hard time with their family, with their relationship, and you want to make sure that you're not bringing that into the chart. And another thing is you want to make sure you're not in a rush or you're feeling impatient. And everything that I have in my trading tracker that I've given you, and I'll go over it very shortly, it's to make sure that one, you're in the correct mindset, and two, you got your emotions in check, and number three, you're actually you're journaling your trades and your emotion, right? That's why the template that I'm about to show you is very good. You can obviously change it to suit your style better, and as you progress throughout trading, you might come up across different hurdles to me. So that's why you can obviously change it to suit your trading and to suit your behavioral problems a lot better. So you want to be calm and present. You want to have accepted yesterday's results and moved on. This is very, 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 very important, because we don't want to go through a downward spiral just because of a bad result or a bad week. You need to be able to mentally reset every day and take every day as it comes, right? And before you actually take a trade, you want to make sure you reviewed the market correctly and you have a clear bias. Okay, sometimes we do not have a clear bias on trading. And this is a misconception that a lot of people have in the trading industry. They think that they always need to know what is more probable. They think they always need to have a setup. And this is what costs people a lot of money, because sometimes the market does not give you opportunities. For example, the past few weeks, the market, even honestly, I can say the whole year, the market has been very, very, very choppy, and it's been in a very bad environment. It's not been in a trader friendly environment. And this is something that we cannot control. We cannot control what environment is presented to us. We can only control our actions within that environment, right? And this, if you had to have one rule that I would force you to implement, it'll be to have a maximum loss for the session. The reason why this is important is because, as we mentioned previously, we do not want one single session to ruin your trading career as a whole, right? Obviously, we have prop firms now, so it's a lot harder to like blow up, because you can just, the maximum you can lose is the prop firm account. It's a lot easier than back in the days where you can lose your whole savings. But having a max loss is very important, and you kind of want to meditate on that max loss before you even take a trade, because that way when you do take the loss, you're not feeling overwhelmed, and you've already kind of practiced that emotion or that feeling, and you're less likely to go on tilt because you've already practiced it, right? And always remember, you're trading to execute well, you're not to win. So we're not in the market trying to make money every day. We're in the market to protect our capital and to only take setups that we're comfortable with if the market presents itself. If the market does not present itself, we do not have to take a setup. Okay, this is very, very, very important. This is scientifically proven, okay? So this is why I have a gratitude section in my journal, which I will go over very shortly. But the reason why we have a gratitude section in the journal is because we want to feel gratitude before we enter the trading arena. And the reason being is because one of the biggest downfalls of day traders is this anxious state that we go into when we start trading, because we might be fearful, we might need the money, or we might be scared of taking a loss. So the reason why we have gratitude is because the brain cannot be in a state of gratitude and anxiety at the same time, right? So these two feelings cannot coexist in the human brain, or in the human body, we should say, because we do feel it in our body. These feelings cannot coexist at the same time, right? So you can either feel anxious or gratitude. You cannot feel both at the same time, okay? So yeah, obviously anxiety activates the fight or flight mode. That's when you start feeling your heart racing. You might feeling some shivering. But what I want to mention is when you're in an anxious state, you cannot think properly, and your focus is narrowed on the threats. So this is very, very, very bad, because you want to be able to think clearly, and you don't want to be in an anxious state, because you want to focus on opportunities and not the threats. So throughout our history as humans, we used to have, obviously we used to be in much more danger. We used to have to run away from animals, run away from people trying to kill us and things like that. So this state used to help us kind of release energy and use that energy to run away and protect ourselves and things like that. But obviously in the chart, this doesn't help us at all, right? And the biggest problem with being in an anxious state is impairs your decision making and impulse control. This is very, very, very important, right? Because if your impulse control is impaired, you're not going to be able to make the correct decisions. You're not going to be able to walk away when you take a loss. And overall, you're not going to be able to become a profitable trader because you're not in control of your impulses, okay? And this will obviously most likely lead to revenge trading. That's why we cannot have bad impulse control. And in order for us to not have a bad impulse control, we need to be level-headed. And in order for us to be level-headed, we need to do gratitude practicing, right? And this could be very simple. So for me, I just have a section on my diary where I just write things that I'm grateful for. Sometimes it could be something as small as a water bottle. Sometimes it's my dog. Sometimes it's my friends. Sometimes it's the team that I support. Sometimes it's the food that I had before I started trading. It's very, very. It doesn't have to be like an in-depth, amazing gratitude journal. Like we're not trying to be females here. We're just trying to make sure that our mindset is clear, and we have a good mindset going into the chart, right? So gratitude state releases dopamine and serotonin. It activates the correct nervous system for trading, and it broadens your perspective. It allows you to think very, very clearly. That's why it's very important. And it improves your patience and emotional regulation, right? Remember how we need to be emotionally regulated so we don't go on tilt and we don't make impulsive decisions and revenge trading. And it makes you proactive, and it makes you more happy to wait for the right trade, right? Okay, so the reason why I meditate or pray, even if it's just for 2, 3, ideally 5 to 10 minutes, but even just a few minutes of meditation, it lowers your cortisol, which is the stress hormone. It reduces impulsivity or reactivity, or whatever you want to call it. And it makes sure you're in a calm, focused state. And that's required for profitable trading, all right? And I want to mention the reason why meditation is very, 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 very important is because you're proving to yourself that you can sit still quietly in your brain, in your thought patterns without doing anything, right? Meditation is literally just being still, right? And trading, a lot of the time we have to be still and not do anything. So if you're not able to just meditate for 5 to 10 minutes before you start trading, it proves that you're on the path to destruct, because you're not able to sit still at the chart. If you can't sit still away from the chart, you're not gonna be able to sit still at the chart, right? And obviously, affirmations is just to make sure that you're in the correct mindset as well, and you're reinforcing positive habits as a trader. That's why I have a reminder section to remind myself of the bad habits that I need to focus on. I have a meditation checklist to make sure that I meditated or prayed before I started trading. And then I have an emotion section to keep track of my emotions. And then I have my daily reminders just to keep myself on track and to remind myself of things I might need to improve on, right? So this section is very important. But basically, I need you to understand that we cannot be in an anxious state. And in order for us to not be in an anxious state, we need to have gratitude in our brain or in our body. And we need to also be able to sit still at the chart. In order for us to be able to sit still, we need to practice meditation, right? This is kind of like a warm up before you get into, you know how soccer players they warm up before they start playing. This is kind of like a warm up to prove to yourself that you are fit enough to trade, because you do need to sit still a lot of the times. Okay, so the way the journal is set up pre-session, we have the mood and mindset check. We practice gratitude. We practice the daily affirmations. We go over the daily reminders, and we chart before we start trading. This is understanding the bias, what is more probable to happen. We'll get into that. This is more technical. We don't have to worry about that yet, right? And then during the session, I write my emotional awareness during the trades, right? So for example, I might take a trade and then I might realize that my heart rate is increasing and I'm very scared of losing, right? So I'll just write heart rate increase, fear of loss, right? So then I will just write that very simple a sentence or two. And then the next day I'll have another journal that is empty where I can reflect more deeply, and I'll think to myself, why was I feeling that way? And I'll kind of break the negative connotations that are coming with my feeling, right? So for example, if I was feeling anxious when I took a trade, and that's because I don't want to lose, I will remind myself by writing it down in my other journal. I have two journals, one for the one that I'm going to show you, then an empty one where I can kind of just write down a lot more on, right? And I will write down what I was feeling, why I was feeling that way, and I would kind of break down why I shouldn't feel that way. So I'll tell myself I should not be fearful because I already did everything that I can do. I managed my risk, and I meditated, I prayed, I made sure that I'm in the correct mindset. So I have no reason to be fearful because I did everything that I can do in my control, and the rest is up to probabilities, right? So that's why during the session, you just want to take down small notes, and then after the session, you can go into depth on what you felt, and more importantly, what actionable steps that are required in order for you to move forward, okay? Okay, before we get into the journal template that you'll be using, I want to go over the OODA Loop. So the OODA Loop is, some people are familiar with it outside of trading, but not many people are familiar with it inside of trading. It's a system designed by Navy Air Force. It allows for effective decision making and progress, right? This is the most important thing. It allows you to make progress, right? And it's a 4-step process it works in cycles. So you'll always be going back and forth, right? So you'll always be observing, orienting, deciding, and acting. And you'll be going back to observing, orienting, deciding, and acting. That's how you overcome obstacles in life. It's by constantly reflecting and putting towards actionable steps that can help you overcome what you came up with in a reflection, right? So it's very simple, right? So we're observing the data that we come up with, and we're observing our emotions as well. So for example, if I notice that on Mondays I'm always losing and I'm always feeling like shit on Mondays for whatever reason, I'm gonna break that down. I'm gonna go into more details on why I'm feeling like that. I'm gonna go into more details into why I'm always losing on Mondays. And I'm gonna understand the information. So this could be me realizing that on Mondays I feel like shit because it's the start of the week and I might not feel productive. And I'm always losing on Mondays because the market is very, very choppy on Mondays. And we don't really get much movement during Asia session, right? So now I'll need to make myself aware that I cannot control the market. I cannot control how good Asia moves during Mondays. And also I cannot control my environment, meaning I cannot make the open for New York come earlier because obviously I can't control the session opening times, right? This is me understanding that a lot of this thing is out of my control, right? So now I need to decide what can I do within my control so this thing doesn't hurt my trading as much, okay? So after I observe and I understand the data, I'll go into more details and more decision making on understanding on what type of actionable steps that I can take so this doesn't hurt my trading as much, right? And this can be something like not trading with high leverage on Mondays, not trading with big size on Mondays. This could be things like avoiding Mondays in total, or this could be maybe kind of like creating certain rules and parameters for myself. That way Mondays don't hurt me as much. So this is observing, orienting, deciding on what to do. And the final step is taking action to actually stick with the criteria that you set for yourself, stick to the rules and stick to the principles that you've come up with. And then once we do that, let's say I overcome my Monday losses, I might come up with something new. I might realize that I'm not very good at trading reversals, for example, reversal patterns. Then I'll observe that my reversal patterns are not doing very well. I'll break down why they're not doing very well, and I'll decide maybe to not take any more reversal trades ever, right? So this is why we're always observing, orienting, deciding, and taking action. Most important thing is to take action based on what you come up with. It's called the OODA Loop, and it's just you want to remember that at the end of the day, this is always what we're aiming for. We're always aiming to improve, and this is a very simple 4-step process that you can keep on the back of your mind to always improve. That way, you know that you have to journal. You have to go into detail on breaking down what you journaled, and you have to make decisions on what to do moving forward. And most importantly, you have to act on those decisions, right? That's what OODA Loop is. Okay, now this is the template that I made for myself. So what I did is I went to Canva. I made 2 A5 pages. I made 2 A5 pages, and I went to my local printing station, Officeworks, and I got them to print it into kind of like a journal notebook for me. And that way I can write down in pen these things. And for me, myself, I kind of have to update it for myself, because a lot of the things that I was struggling with, I'm no longer struggling with. I'm at a point in my trading journey where I need to scale up, and I need to figure out the best way to scale up and to deal with the emotions and certain things that come up whilst trying to scale up, right? So this is the thing. This way you start. You put the date in, and you remind yourself that discipline builds results, not the other way around. It's just reminders for yourself to stay disciplined, right? And this is before you even start trading, or just to make sure you're in the right mindset, to make sure you're in a gratitude mindset, to make sure you've already got your max daily loss in set, and to remind yourself that everything's possible if you just ask for it, right? It's a biblical principle. And my emotional score, I just like to keep track of it, but it doesn't, honestly, I haven't used that as data to help me move forward, but a lot of these things I will use as data to help me move forward, right? So we have daily reminders, and we're making sure that we're locking in before trading. We're making sure we're detaching from external factors that can impact our result. Remember how we discussed we cannot let external factors impact our trading? And this is daily reminders for myself with things that I struggle with. Sometimes I would trade when I'm too tired. So if I'm too tired, just step away. I made sure that my execution, meaning when I enter, is more important than my market reading, because my market reading is very, very good, but sometimes I enter at the wrong times. I made sure that I remind myself to stay disciplined, stay in the moment, and to remind myself that losing is normal. This is allowing me to take a loss, because now when I do lose, I've already reminded myself beforehand that losses are normal and not to make them ruin my day, right? So this thing, you can obviously, as time progresses, you can create your own, and you can change it with things that you might be struggling with, right? Because obviously we all have similar struggles, but at the end of the day, everyone has sometimes different things that they struggle with, right? The reason why we have this is I've already explained to you that gratitude is very important, and it makes sure that we're not anxious. If we're grateful, we can't be anxious, right? So you just write down a few things you're grateful for. You write down a few affirmations that can help you be in the right mindset. And this is very important, because what we're doing here is we're deciding how much we're allowing ourselves to lose before we even get into the trading session, right? And this just makes losing more easier. This personal account, evaluation account, and funded accounts, right? So obviously I don't trade personal right now, but it's just there just in case. Evaluations account, I obviously take more risk on them because they're evaluations accounts, and I just need to get funded. Funded is what pays you. Evaluations doesn't pay you. Now, as a beginner trader, you do not need to be as aggressive with evaluations because you're still learning, right? But as an advanced trader, I'm a lot more aggressive with evaluations, and obviously this comes with the downside of me blowing evaluations much quicker because I'm more aggressive, right? But with my funded accounts, I'm a lot more passive, meaning I'm going to risk less per day on my funded accounts than evaluations. That's why this thing is here, to make sure that I am aware of how much I am willing to risk before I even get into the chart. All right, so we got making sure we're in a correct mindset, reminding ourselves of affirmations, and also we're making sure we're in control of how much we're losing before we even open the chart. We've also got daily reminders that we've set for ourselves to make sure we're in the right mindset. All right, that's before you even start trading. And now this is before you actually take any trades. You want to make sure you meditated or prayed. We already discussed why it's very important. We've already journaled the previous day trades and emotions, so we've already gotten that out of the way, and we're ready for a new day. We want to make sure we're present and we're not worried about previous day results. And obviously you want to make sure you're not high or drunk, right? That's very obvious, but just making sure. Now, the pre-execution checklist is to make sure that we've actually charted and we've looked at the technicals before we even take a trade. We want to make sure we've already got our buyers, making sure we looked at the watch list and we eliminated any choppy looking pairs. This is technical, so don't worry too much about it. I just want to explain how we use it. We want to make sure we've also got the in-depth analysis of all the things we're watching. And then the execution checklist, this is for reviewing. This is you do fill this in whilst you're trading, but this can be reviewed and touched upon after you've traded, right? So just making sure that we took setups that we were already prepared for. The stop loss was based on a good level, and the stop loss was already predefined. Normally this comes from daily max risk as well. And you want to make sure your stop loss was respected, meaning if you were risking $500, once you lost $500, you actually took your loss and you didn't move your stop loss. It's very important.
If anyone would like this template, it is completely free for anyone. I'm happy to share it, and you just need to print it out at your local office station, and the link will be in the description. Make sure you get this template because it really did change my life. Okay, guys?
FOMO, fear of missing out. And then later on my plain diary, I'd go into more details onto why I was feeling that way and how to overcome it, and any other emotion you might experience, right? This is just to keep track in real time of anything you're feeling. And then later on, after you're done trading, you can go into more details onto why you were feeling that way. And we can go into OODA looping. Where is it? We can go into OODA looping after you've already kind of touched upon it whilst you're trading, okay? And then any rules broken, just to any of these rules were broken, you can write that down so you can reflect on it. And if you want to include any positives for the day as well, okay?
If anyone would like this template, it is completely free for anyone. I'm happy to share it, and you just need to print it out at your local office station, and the link will be in the description. Make sure you get this template because it really did change my life. Okay, guys?
Okay, so now we understand why the markets move and the participants in the market, the reality of day trading and why most people lose money, the importance of risk management, and the importance of the trading journal, right? So we got 4 of the most important things out of the way. So now we'll go into prop firms, what they are, how evaluations work, and why this changes everything when it comes to risk management, okay? And always remember that the process that you build is your edge, right? Because the process is the one that ensures your risk is on point, ensures your mindset is on point, and it ensures your technical execution is on point. So you must be able to master the process that I'm giving you before you can get very good at trading and making profits. So everything we've learned so far, this is what builds your process. And then everything else is a byproduct of how good your process is, okay? So now we're only 2 or 3 more episodes away from getting into technicals, which I know you're very excited for. But you just need to make sure that you understand everything we've discussed in these 4 episodes. And everything I've tried to narrow it down into very simple terms, and I have left everything out that you do not need. But if you kind of understand these 4 things and then you build the correct mindset, the technicals will come easy as time goes by.